Good day, money masters and treasure hunters. Welcome to the closing bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away for the evening. And folks, if you're not familiar with me, I kick things off for TFNN each day, 9 o'clock on the opening bell show on the Trader's Edge. You can catch all those shows at TFNN.com if we're not played on a radio station in your area. All of our shows are broadcast live, so you can watch the, and when I mean live on Tiger TV, you can watch our charts. In fact, if you're listening on the radio or your mobile device, you can always catch the archive of this show on the homepage of TFNN.com. My shows, the 9 o'clock shows, are archived on Channel 9. And folks, I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call a diamond in the rough. Now, if you were to visit a diamond mine, you would see only ordinary earth, because diamonds in the rough bear little resemblance to the brilliant, valuable gems that sparkle in the windows of those jewelry stores that every now and then you might pass. You see, diamonds, folks, they must be found, then cut, and finally polished before they become the precious gems of great beauty and value. Now, in fact, if you were to analyze the chemical properties that compose a diamond, you'd find that these chemicals are worth very little individually, but in the slow-working hands of the universe, they produce a work that is magnificent to behold. And thus goes the world, folks. The universe has made you a gem of life, and you are the one who has the opportunity to take this diamond in the rough and fashion it into a thing of beauty, a thing of brilliance. Have you ever been cut a few times in life? I know I have, but folks, those cuts, once we polish them, those cuts become the facets of life. They are the ones that create the sparkle and the brilliance to behold. You are the diamond cutter, folks. You are the diamond in the rough, and you are the gem in our life here at TFNN. Let's go take a look at the brilliance of these markets. We had the markets finish up today. The Dow up about 0.4%, almost 0.5%, up 62 bucks out at 13,712. The S&P up 6.5 points, closing out at 1492.51. The composite up 8 points, closing out at 31.43. The Russell 2000 up 0.7%. The leader in the clubhouse closing out at 899.24. The New York Stock Exchange up 0.5% as well, up 40 points, closing at 88.32 out there. Even the NDX up, of course, only 0.1%, up $2.95. We do have some activity in the markets here. We have Google out with earnings. Google generating $10.65 earnings per share in the fourth quarter. That is versus the estimate of $10.50 out there. The net income, $2.89 billion versus $2.7. Actually, that was from the, that's GAAP net income out there. Revenues are $8.6 million versus $8.22. Google closing out at $702, trading at $735. We'll come back to the Google chart. IBM as well, I believe, out with numbers here. Let's check this out on IBM. Closing out at 196.08. They are trading up at 203. Our call-in number, as always, is 877-927-6648. But first, let's start with the S&P 500, closing out at 1492.51. Where is this baby going? Well, we've got an A to B equals CD pattern. That's starting with the November 16th low. That is at the 1343.35 level. That's your A point. Your B point is the December 18th swing point high of 1448. What the S&P does, pulls back into that December 31st takeoff date out there. The low was 1398. 1-to-1 A to B equals CD. Not that much further ahead. 1502.54, closing out at 1492.51. You've got a butterfly pattern just above that level out at the 1510 mark. I suspect that that is where the S&P is headed to. Do not chase this market. Do not chase. I will show you all the reasons why you shouldn't. If you are watching us on Tiger TV, most certainly you are seeing down in the bottom section of my system here of the charting software that I'm using and take a look at the relative strength indicator out there. That today closing in the 71 level. When you get to 70, folks, you truly are getting into overbought territory. And if we go ahead and we take this chart back to the left-hand side, you'll see that the last time September 14th, when the S&P made its highs, it was also at about 74% inside the relative strength indicator. Can it go higher? I suspect it will. I suspect we'll see this A to B equals CD. I suspect we'll see the butterfly pattern go ahead and complete. You want to be buyers when the relative strength is down towards the lows, towards the 30% level, just like it was in November 16th. To be exact, just like it was back here in June. You do not want to chase these markets up here. They will likely end in a bad result for you. That is on the S&Ps. If we go take a look at the SPYs, let's switch over to the SPYs. You know, in the SPYs here, the September 14th swing point, that is the number, 169 million shares on Friday as the SPYs closed. They closed with 169 million, closed a little bit higher out there, closing out at the price point of 148.33. So they get over September 14th. The 1-to-1 A to B equals CD on the SPYs, 150.40. If we go take a look and see what the butterfly pattern, and what a butterfly pattern is, folks, we're taking a look at significant swing points. That certainly is the September 14th area, all the way down to the most recent low, and we're just taking a look at an expansion. What the world does, just like you and I do, we're either contracting or we're expanding. Right now, what we're seeing the markets do is we're seeing them expand. It is a normal part of behavior. It's a normal pattern out here. 151.76 is the expansion, the 1.272 expansion. I'll go ahead and color this in for you. And as soon as I get this thing here a little bit shorter, that way you can see the beautiful wings of the butterfly that are being created out here. And that is what a butterfly pattern looks like, folks. And that is a reversal pattern. Now, it's not a reversal pattern until the bears show up. And the bears will show up by showing you reversal candle signals out there. That is the trigger. Even though you finish patterns out there, do yourself a favor. Wait one more bar. Wait one bar before you enter any trade. Make sure the market is moving in your direction. If we go take a look at the Dow, let's look at the Dow index, and we'll take a look at the New York Stock Exchange, because that is an important one for sure. If we take a look at the Dow up and over the October 5th swing point high, 13,661, as well as over the September 14th. October 5th was actually the number. Up and over it, you can see also moving into the overbought condition out here. The 1-to-1 A to B equals CD, a little bit higher out at the 13,780 mark. If we take a look at what is the expansion, I'm sure that you want to know what is that 1.272 butterfly expansion. Well, that's quite a ways up. That is in the 13,974 area, about 14,000. Why don't we just call it 14,000? And that would be on the Dow. I suspect we're first take a look at the 1-to-1 A to B equals CD pattern. If we go take a look at the Dow diamonds, let's go see what the diamonds here have done and take a look at the volume behind the patterns in the diamonds. The diamonds up and over the swing point of October 5th as well. That had 4.5 million shares. September 14th, 5.1 million shares. Up and over them today with 4.2 million shares. Something to think about. Up and over with lighter volume. Can they drift higher? Absolutely. Will they drift higher? I believe that they may. We'll know that the move is over as soon as we see a reversal candle signal. We haven't seen a reversal candle signal most certainly since that really since December 31st. December 31st was a reversal signal. That was a bullish engulfing candle that was out there. Now what you want to do, don't chase it. The diamonds also in overbought territory out there. Now let's go take a quick peek here at Google. Let's go see what Google is doing. We know in the post market here, closing at 702, trading at 732, and it seems like somebody knew about it. In fact, today was a hammer candle. So as the market was moving down, the bulls stepped in here. You did have the bears. They had the control of the session intraday. In fact, they were going and tagging the low of the swing point created on December 31st. Unlike the market, unlike the Dow, unlike the diamonds, the SPYs, the S&P, which have not made it back into December 31st, what Google did was pulled back into that December 31st candle. Well, that has 2 million shares today, backing down into that level with 3.5 million shares. But somebody out there must have known something, because the bulls stepped in, created a hammer candle that is a reversal signal, even though it came down and got into a swing point with more volume. Right now, trading out at 735. Where's 735 going to take you to? Now, remember, as we take Google back here, Google has plenty of work to do. Don't chase this one either. Google here is going into that October 18th and October 19th downdraft. Huge volume on the way down. That was the last earnings reports out there. 12 million and 11 million shares respectively. Wait, even though we got a little hammer candle here, wait, let's see what kind of volume we get inside Google. 877-927-6648. We get back. We're going to go out to Denver, Colorado. We'll take a look at Great Basin Gold. And you too can get in on the action. Just give us a call, folks. Hope you're having a great Tuesday. Hope you had a great holiday weekend. If you did have an extra day off and you're all rested up, just like these markets that took off, make sure that you are focusing on where you're going. We're going to focus on where the markets are going. We'll be right back.